Hey, welcome back. I'm going to skip the small talk today because something just happened in this market that I genuinely did not want to be sitting here talking about. Bitcoin just broke below the weekly 200 EMA, the exact level we called out in the last video as the line in the sand. The one we said if this breaks, reduce exposure, reassess. It broke. Now, before your stomach drops, I want to show you something because while that chart signal is real and I'm talking it seriously, there's another side to this story that most people scrolling through their feeds right now are completely missing. And by the end of this video, you're going to understand exactly why the most fearful moment in this market in years might not be what it looks like on the surface. So let's get into the charts first, no sugar coating. The weekly 200 EMA is sitting right around 68k. We're about $600 below it right now, and on the daily chart, the 200 EMA is all the way up at 89k. We're roughly 24% below that one, so both of the big moving averages that traders watch are sitting above us. The trend on both timeframes is down. That is just the honest read, and I'm not going to dress it up. But here's where I want you to slow down for a second, because there's a difference between a break and a breakdown. And right now, we don't actually know which one this is yet. The weekly candle hasn't closed, and that matters more than most people realized. Bitcoin has dipped below this exact EMA before in 2020, in 2022, and come back above it within the same week or the next. When that happens, it's called a fake out. And fake outs at major levels like this one have historically been some of the most violent bullish reversals on Bitcoin's chart. So what I'm watching is simple. Does this week close above 68k or below it? Above this is a fake out and the recovery story gets back on track. Below, the structure breaks and we have to look lower. If this breaks down, 65k is next. Below that, 60k comes into view. On the flip side, a reclaim of 68k reopens that path towards 72k, and above that there's an air pocket all the way to 80k where barely any supply changed hands. That zone could move fast if we get there. One number this week, 68k on the weekly close, write it down. Real quick, if you're actually trying to trade any of these levels and not just watch them, I use BitUnix. Clean, fast, doesn't get in the way. Link is in the description, by the way. Alright, fear and greed just came in at 8 out of 100. Let me put that into perspective for you. The last time we saw readings anywhere near this low was during the COVID crash in 2020, when the entire global economy looked like it was shutting down. And briefly at the lows of 2022 bear market, those two moments in hindsight turned out to be two of the best long-term entry points Bitcoin has ever produced. Now, I'm not saying that to hype anything up. Fear at 8 does not mean the price can go lower. It absolutely can. But what a reading like this tells you is that the panic sellers have largely already sold. The people who were going to exit in fear, they are already out. What you're left with is a market full of long-term holders sitting quietly and waiting. And then you look at what institutions just did. Spot Bitcoin ETFs just had back-to-back weeks of inflows for the first time in 5 months. Around $570 million this week, nearly $800 million the week before, over $1.3 billion flowing back in after a 5-month streak that saw roughly $4 billion leave these products. So retail is at an 8 on the fear scale, and the institutions just put over $1 billion back in across 2 weeks. Those two groups are not reading the same market right now, and I know which side of that trade I'd be rather on. Let's go on chain for a second because this is where it gets really interesting. MVRVZ score is sitting around 0.4. For context, the cycle top we saw at 126k had readings above 7. We're at 0.4. Not historically cheap, but nowhere near a danger zone. And around 400k Bitcoin were accumulated in 60k to 70k range during this pullback. That's a wall of cost basis sitting right below us. Those holders aren't selling at a loss for fun. But here's the one that got my attention this week. Michael Saylor, the guy who runs Strategy, which holds around 720k Bitcoin, posted his accumulation chart on X while Bitcoin was near 66k. If you know anything about how Strategy operates, you know that chart is the bad signal. It has shown up before every single purchase they've ever made without exception. Now, here's the part that matters. Their average purchase price across that entire stack is around 76k. They're underwater right now, their whole position is in the red, and they're signaling they're buying more. Think about that. One of the most committed Bitcoin holders on the planet sitting on a loss is adding to their position in the middle of a fear and greed reading of 8. That's not someone panicking, that's someone who decided a long time ago what they believe and isn't letting a price chart change their mind. If you're thinking about how to position around these levels, Bitunix is what I use. Easy to set up, solely for managing entries when you have an actual plan behind the trade. Link is in the description, by the way. Quickly on macro, because context matters here. The dollar is sitting around 99, near multi-week highs. The reason isn't really the Fed this time, it's the US-Iran situation driving safe haven demand, pushing oil up and pushing investors into the dollar. Strong dollar equals pressure on risk assets. That's a headwind that's been real, and it's part of why we're sitting at 68k instead of somewhere higher. The thing about geopolitical safe haven demand, though, it doesn't last forever. When the immediate fear fades, that premium comes out of the dollar and risk assets tend to breathe again. The first Fed rate cut is still priced in for mid-2026. That's a tailwind sitting in the background waiting to show up. And I have to mention this one quickly because it genuinely stopped me when I read it. A company called StarCloud, backed by Nvidia, announced this week that they're going to mine Bitcoin in space, literally in orbit, on a spacecraft launch later this year. Their CEO said ASICs are about 30 times cheaper per kilowatt than GPUs in space, making Bitcoin mining one of the best use cases for orbital computing. We're sitting here with a fear and greed reading of 8, and Nvidia-backed companies are launching Bitcoin mining infrastructure into orbit. The people building long-term are not behaving like this technology is going away. That's the vibe check that no index can measure. Before I wrap, markets like this one are where having the right execution tools matters. Bitunix is linked in the description, worth having set up before you need it. Here's exactly where I am. Last video I said a weekly close below 68k means trim and reassess. Price went below it, so I trimmed. I have more dry powder now that I did a week ago. I followed the plan I said when I could think clearly, not the plan I felt like following when prices were going down and everything felt bad. Base case, this is a fake out at the weekly 200 EMA during near historic fear. Institutions are buying, Saylor is buying at a loss, and we reclaim 68k on a weekly close. From there back towards 72k through the air pocket toward 80k, delayed from last week's timeline with the same destination. Risk case, we don't reclaim 68k, dollar holds strong, we drift towards 65k and potentially 60k. In that world, I want cash, not exposure. The single number that decides which world we're in, 68k on the weekly close. Fear at 8, institutions buying, Saylor buying at a loss, Bitcoin being mined in space. This market is a lot of things right now, but boring isn't one of them. Drop your levels in the comments. I will see you guys in the next video.